Good morning, traders. Good morning, traders. Today we want to discuss the Elliott wave equality. The Elliott wave equality. The title of this video is Learn to Trade Elliott wave equality like a pro. Alright, let's get started. Recently, I have posted videos at 24 Elliott Wave YouTube channel. And we were talking about the normal third Elliott wave and the extended third Elliott wave. But today we want to talk about the Elliott wave equality. All right. So if we are now able, we are now equipped, okay, to identify what is a normal third Elliott wave and what is an extended Elliott wave. Now, with that information, how can we, okay, apply that knowledge in the financial market, okay, to make better day or swing trading decisions? All right. So the first thing that we need to understand, which I explained to traders before, is that the first, the third, and the fifth wave are likely to be extended. Those are what we call the motive wave because they are going up if the trend is up, and they are going down if the trend is down. That's what we call the motive waves. They are not contra trend waves. They are waves that are going in the direction of the trend. So either the first, the third, and the fifth wave can be extended. All right, it's very simple. But talking about the Elliott wave, the third Elliott wave, we now, okay, we can now identify what is a normal third Elliott wave, and we can also identify what is an extended Elliott wave. All right. So for traders who did not watch those videos, the normal third Elliott wave is likely to end at 161.8% Fibonacci extension level of the first wave. So the extended third Elliott wave will go beyond, okay, that 161.8% Fibonacci extension level. And I recommend to traders to watch the level 214%, 314%, and the 414% Fibonacci extension level of the first Elliott wave. All right. So that is something we talked about before, is the equality of the Elliott wave. Very often, my friend, if the third Elliott wave is extended, because now we can recognize what is a normal third Elliott wave, we can recognize also what is an extended Elliott wave. Now there is something else that we need to know, is that when the third Elliott wave is extended, very often the first wave will be equal to the fifth wave, or the fifth wave will be equal to the first wave, either in length or in magnitude. This is a powerful information that will help us to pinpoint the end of the fifth wave. So there are many ways that we can forecast the fifth wave, which we talked about before. So recently I've been posting video about Elliott wave channeling, all right, when we are using channels to forecast the end of the fifth wave. All right, but there is another thing that we can use, is that when the third Elliott wave is extended, there is a high probability, not guarantee, not certainty, it is not an exact sign. There is a high probability that there will be equality between the first and the fifth wave. As you can see here, so we count the first wave, the second wave, the third wave, which has been extended. Why? Because it went above the 161.8% Fibonacci extension level of the first wave. So the third wave has been extended. Now we have the fourth wave. Now we can see that the fifth wave is underway. So if you were here, I'm on the monthly chart. After two bullish candlestick bar up here, you know that, okay, it looks to me that the fifth wave is underway. How can you forecast the fifth wave? Now, by using the Elliott wave principle that stated that if the third Elliott wave is extended, there is a high chance that there will be equality between the first and the fifth wave, either in length or in magnitude. So, professional traders that are counting with here, trading this stock, okay, Dana Hell, Corporation, APK DHR. This is an American stock. So you can see that professional area wave traders that are trading this stock understand that the wave principle stated that if the third area wave is extended, there is a high chance that there will be equality between the first and the fifth wave. So what do I mean by in length? In length is that we just measure it. So what you do, you draw a line through the first wave. So here it is, the first wave, we draw a line through it. So from here to here, that's the first wave. That's the length of the first wave. The height of the first wave is from the top, so from the top of the first wave to the lower part of the first wave. This is what we call in length or in magnitude. So as we see that we see two candlestick bar up here, we know that the fifth wave is underway. We'll use this length of the first wave, expecting that there will be equality between the first and the fifth wave. So we will project it, pay attention carefully. So my projection, I'm going to color it now into red, the length of the first wave, that's the red line on the chart. So we will be expecting it to go up to this point here. So all we need to do, we draw a line there, and we will expect the fifth wave to end here. But there's something else, this is what we are talking about all the time, the practical area wave trading and the theory. All right. So if you put the length of the fifth wave at the bottom of the tail of this candlestick bar here, you see I put it at the lowest point. This is below the low of this candlestick bar here. I put it here. If you put it like this, you'll expect the fifth wave to end somewhere here. So I'm going to color that target into pink. All right. But one more thing I want you to do, this is about practical area wave trading, is that apart from putting it at the lowest point, because those candlesticks back here, you can see there are some tail here. All right, so that's the first target. The next thing I want you to do is that after you put it at the lowest point, you can also move the same length and put it at the closing price. So now I put it at the closing. You see, this is the closing price of this, at the opening price or closing price. Here it is. So I'm putting it here. You see how the candle here. So I put it here. For this one is the opening price. For that one is the closing price. So you put it somewhere here. Apart from the tail, you put it also here. All right, and you will get the target. Now you will be watching two levels. Sometime the price will go, the professional, which means a lot of professional will put the line at this instead of putting it at the lowest point here, setting their target at the peak line. Some trader will put it at the closing price like this, you see here, at this closing price with this bearish candlestick bar, and they will project it here, and this is the target for the end of the fifth wave. But does it mean that the fifth wave will definitely end there? No. Because the area wave principle is a guide. So because we are trading, all right, as an area wave trader, the advantage that we have, sometimes we know things, we know what is likely to take place before it's taking place, which is good. All right, which is good. Suppose you are okay, you are trading for an investment bank, you are trading for a hedge fund. All right, it will be good to have an area wave practitioner in your team to give you a bit of idea what is likely to take place. And if it's taking place, all right, you will take advantage of it. It will also help you to manage the risk and also to exit the trade at the right time and also at the right place without leaving too much money on the table. So here it is, you see, by projecting the length of the first wave, we have, okay, if we put the length at the bottom right here, we have the pink line as our target. If we put it at the closing price, we have the dark green as a target. That's where. So you can see that it's not by mistake. You can see that this stock has been going down. And then as you reach that level of 8074, did people take profit here? Yes, they did take profit. They did take profit. All right, they take profit here. So by using the length of the first wave, you put it at the bottom, okay, of the fourth wave, and you can also put it at the closing price if the candles here have a long tail. So by doing that, you have two targets. You see how the price changes direction here. So as an area wave, as the price approach, you see here, you see this candle here where I'm moving my cursor now. As the price reaches the pink line, you see people took profit first. This candlestick bar went up to the pink line, and then before it pulled back a bit. Even if you are a day trader, you can quickly scalp, trade, or day trade around those target level. There will be a kind of pullback. So if the price reaches a station, all right, you know that professional are watching that level. So if you are swing trader, you can secure your gain, or you can take your profit altogether, or you can minimize your risk by moving your stop loss. All right. And then if the price breaks above the pink line, you'll be watching the level of 8074. Now, if the price reaches, okay, the second target, and you receive a bearish signal, will you take it? Yes, because you will expect professional trader to take some profit in this zone. So if, as a swing trader, as a day trader, in this zone, you are ready after you trade it up to that point. Now, you are now switching from swing trading to day trading mode. You see what the price is doing now? The price, you will see that the price, it went down after it reached the level of 8074. It pulled back to acknowledge the pink line. You see what's happening in this financial market? You see all the tail here? It dropped it, it got a tail. This one open here, drop a little bit below the pink line, went back up. Look at this one. As it starts going up, look where it stopped. Again at 8074. Which means the professionals are not trading blindly. They know all these key levels, and they are making decisions around those key levels. Now, so the reason why I'm recording this video today is because we just talked about normal third area wave and extended third area wave. Now, practically, what can we do with it? All right, this is what I do care about. Practically, it means that if the third, now we can recognize what is an extended third area wave. Before, maybe you do not know the difference between the normal third area wave and the extended third area wave. Now you know it. Now, if you see an extended third area wave, you will say that this is an extended third area wave. Therefore, if the third area wave is an extended, we must use, okay, the length or the magnitude of the first wave, because there is a high chance that there will be equality between the first and the fifth wave. Talking about the magnitude, here it is from the lowest point to the top. If I project it at the lowest point at the bottom, you see where it stopped? Can you see the vertical line? It stopped where? On the peak line, which is also equal to the projection that I did before from the bottom of it. You see, same level, 7709. Now, I want to do something else as I did before. All right. This time, I will put my the magnitude or the amplitude. So sometimes you hear today talking about the amplitude or the magnitude. So personally, in my video, if you hear the word magnitude, just remember that it also means the amplitude, all right? Same thing. So now that I put it at the lowest point of the fourth wave, suppose I move it to the closing price. Here it is. Look where it stopped from the closing price. Can you see? Are you following me from the closing price? Where it stopped? Exactly the same level, 8074. So talking about learn to trade area wave equality like a pro, is based on the area wave principle that stated that if the third area wave is extended, there is a tendency that very often we may see equality between the first and the fifth wave. And we are talking about the length and the magnitude of the first wave. All right. But practically, when we are trading, how professionals are putting those lines on their chart. They are putting it at the lowest point of the fourth wave, or they will put it at the closing price of the fourth wave. All right, so be aware of that, what is happening in the financial market, and how you can make excellent decisions. So now, as the price reaches the target, what should be our attitude? All right, we will be expecting that a correction may begin. All right, but do not assume that definitely the fifth area wave will definitely stop there. What I'm trying to do here is to help you, okay, discard, okay, the old habits that a lot of area wave traders are exhibiting, which means this is exactly what's going to happen. No, this is not exactly what's going to happen. There is a high chance, high probability that that can happen. And if it's happening, what do you need to do? We will profit from it. Very simple and also very powerful. So now you know it. So At this stage, so if you have subscribed to our channel for some time, you now at this stage, okay, you have all the equipment, all the knowledge to start improving, okay, your area wave analysis. You can use the first area wave to forecast the whole multi wave. You can use the second wave to forecast the corrective phase. All right, you can forecast, okay, the end of the fifth wave. You can forecast the end of the third area wave using area wave channeling. All right, there are many other ways. All right, in the next video, I will be recording another video when I will be talking to trader. How do you know that the correction has begun? All right, how do you know that the correction has begun? There are many ways that we can have a bit of idea that the correction has begun, but the simplest way to know that a correction has begun, I will be talking about it in the next video. All right. As always, my friend, if you have any question, all right, do not hesitate to put in the comment section. I read all the comments, and in due course, all right, I will record another video to clarify your specific question. We are the TSTWSYS008 traders talking about learn to trade area wave equality like a pro. To summarize this video, if the third area wave is an extended third area wave, there is a high chance there will be equality between the first and the fifth wave. Sometime before I close this video, we may also have equality between the first and the third area wave when we have a normal third area wave. I don't want you to get confused because I want you to concentrate on the most important thing. Third area wave is extended, high chance there will be equality between the first and the fifth wave. But do not assume that definitely the fifth wave will end exactly there, but only just understand that there is a high probability that it will stop there. And if it's happening, you will make excellent trading decisions. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Speak to you soon.